Yeah, so this article was basically about the US elections, Trump, Biden, what's going to happen to the markets, etc., etc. And I guess, this is to be honest, it's a crapshoot. No one actually truly knows, as there are other things that are moving the markets, not the general public. Hell, even SoftBank took a bunch of call options and pretty much single-handedly rocketed the Nasdaq to ridiculous heights. So my answer is I don't know, mate. But then, this is more of what I know. What I am positive about is that regardless of who the president is, we will see negative rates across the world before we see runaway inflation. And runaway inflation won't kick in until currency velocity spikes up and stays positive. And that won't happen until proper Chinook-sized helicopter money is waterboarding the economy. So until all that happens, the usual spikes up and down in the stock market, with the down spikes followed by new and bigger rounds of stimulus. So let's draw that out, because I know that sounds a bit sort of gone back to front there. By the way, history's taught us that it does this all the time. So this is not me plucking something out of my arse and going, this fits my narrative. This sounds, this could sell some videos or whatever. This is just what history has taught me. And what history has taught me is that no matter how sophisticated a country or leaders are, the governments always do the same thing. And what happens is that they're reactive. They're never proactive. So when we see price inflation start to go wee like this, and everything gets ridiculous, the only way they can stop that really is by, or what they've done in the past, is raising rates. Okay, so remember the central bank has two pedals in their, or levers in their car. One is printing, one's the accelerator, which is print more money, print, and the other one is the brake. And the way you put the brake in is rates, so interest rates, as in base rates, etc. LIBOR. So that's what will happen. Now, we are not seeing inflation. We're seeing monetary inflation for sure, but we're not seeing price inflation. And the reason we're not seeing price inflation is that, I mentioned this a while back. So money velocity, Fred. Sorry, I forgot to type in Fred. There we go. Fred is the Federal Reserve, St. Louis Fed. There we go. So just look at this. This is velocity of money. So they are printing and print. So they are doing the biggest amounts of financial stimulus that we have ever seen. Bigger than the GFC, the Great Financial Crash. Well, I don't like that term. The 2008 subprime mortgage collapse. That's more what it was. They did huge amounts of QE back then, stimulus. But what we've done in the last 6 months is it's like 2020 is looking back at 2009 going, hold my beer, watch this. Because 2009 is when they started doing huge stimulus, and they've literally just dicked all over 2009 to 2012 stimulus in a matter of months. And that's because velocity is falling, so no one's transacting. The whole world is going to pot. And so until we can get this, we will not see. So they can pump. They can do whatever they want. Pump. And they could pump $10 trillion if they wanted. And as long as MV is still going down, it doesn't matter. They could print 100 trillion. It doesn't matter, because if no one's transacting with each other, game over. It's a bit like, in fact, this is better. This is a better analogy. If I can just get my annotation, clear all drawings. It's a bit like having a car. This is a car, by the way. You can tell I'm very talented in some parts of my life, like my drawing. So what they're trying to do is that they're trying to, let's say this is the fuel tank. Obviously a fuel tank doesn't stick out like a bumper, but They're trying like, okay, the car's not working. How do we get the car to move forward? And we've got some dipshit going, oh, here's what we do. We just simply need to make the fuel tank bigger. Yeah, that's what we need to do. Let's make the fuel tank bigger. Okay, we filled it full of fuel. Okay, the car's still not working. Why is that? Well, okay, let's just make the fuel tank bigger. Let's try that. Obviously, we get loads of fuel, and this time we'll try jet fuel. We'll try type diesel, or in fact, diesel and jet fuel are the same thing. All sorts of different, fuels. But the reason the car's not moving is because the freaking engine's broken. Like the cogs, the motors aren't turning. They can't get this kick started. So it's irrelevant what fuel you use or how big or how much fuel you actually give this car. Nothing's gonna do anything. You need to get the engine working. And what is the engine in this instance? The engine here is commerce. And how do you get commerce kick-started? You need to get everyday civilians, you need to put money in everyday civilians and get them out of their scared phase and into spending phase. At the moment, so this is what happens in history, is that they give money to the public, but oh dear Lord, dog going nuts. I'll just have to ignore it. But everyone's saving. So if you look at other charts, you'll see that the savings rate's gone through the roof just because they're trying to pay down debt. People get money like a loan or Corona loan or whatever it is. They'll pay down debt. They'll get rid of their debts. They'll start saving. They're not going to spend money on a new car, etc. But once you get everyone past that stage, and you give them, some form of UBI, and if they're clever, it will be a time-limited UBI. So it'll be like, hey, you've got $700 for free. This is your UBI here, but it expires in 2 weeks. Well, what do you think everyone's going to do? Everyone will go, shit, I've got 2 weeks to spend $700, or 4 weeks, let's say. I've got four weeks to spend $700, otherwise I lose it. It will be a use it or lose it policy. That is when you go, MV starts to do this. But then guess what? If MV starts doing this, you're then going to have an explosion of capital flooding into the market. And that is when interest rates, that's when rates start doing this, because, well, you'll see, first things first, you'll see inflation start to go nuts, because it's like opening up the dam, and the water's flooding into the flooding everything, and then they'll have to do rates to go up. But in the meantime, they're still dicking around putting all sorts of fuels in a bigger and bigger fuel tank, and the next thing that they're going to try and do, in a non-car analogy, is lower interest rates. They're like, right, we need to get MV going, let's just lower rates, let's get everyone borrowing more, as in businesses, not the public. The public will never even, like, we could go to negative 2% base rates, and the public would never get the benefit of that. I reckon, like, even now we're at pretty much 0% rates, and if you want to go and get a loan from a bank, they're going to charge you like 8 to 10%. So the public will never get the benefit of cheap debt, only the banks.